Hey guys, it's Kevin with Watchhimtrade.com. Happy 4th of July weekend. Hope everybody enjoyed themselves. Doing my Bulls versus Bears outlook this way as opposed to the other way where I'm usually showing my face wearing a jersey. And the reason for that is I'm still neutral on the market and I just kind of felt repetitive continuing to explain the same thing over and over again without any real visuals. So I'm going to jump to the charts here this time. This is a chart of the S&P 500. And the story for me is that we are still very much in a channel. And, even with the volatility from last week, we didn't break down at all yet. At least not to my level. All right, I've taken the approach that the only key support level in my eyes that's going to qualify as a breakdown is the March lows. And that's at 2040. Underline them here. Some people might be looking at these June lows and say we've already broken down, beneath the April and June lows around the 2070 area, so that this qualifies as a breakdown already. Other people might be looking at the December and January lows down around 2000 to 1970 and say that's where we're going to break down. I'm choosing 2040. So I think I said a couple weeks ago when we were up around 2100 that if we broke below 2100, we could set up some channel downside towards the 2060 to 2040 range, and that looks to be where we are going. What I did like, I am neutral, but I will say what I did like to the Bears' credit is usually when we have these big down moves here that we just had, we typically see a pretty solid hard recovery. So for instance, you look here, I'm just going to draw a couple V's. A lot of V-shaped rallies, however meaningless they've proved to be in the grand scheme of things, nonetheless, plenty and plenty of V-shaped rallies, just a ton of them dating back to December, where you have a big drop in a day or 2 days, and then you have a big pop in a day or 2 days. This time, though, we got this big drop, and you have yet to see a big pop back up. And in addition to that, you are also stalling out here around previous support levels. You had support between 2070 and 2085 on the S&P at those April, May, and June lows, and now you broke below them recently, and your high this week is in this 2070 to 2085 range. Your high, in fact, is exactly 2085, and I think that's scores some points on the bearish side. But again, for me, I've still got to be neutral because we're still within 6-month highs and 6-month lows, and just haven't really gone anywhere overall this year yet. To me, that's just how I see things. So neutral, but I guess you'd say right here, right now, giving the Bears a little bit of credit and maybe giving them the benefit of the doubt that they can get a down move. And it's very important now, if you want to be bullish on things, that you keep going and you get back above 2100. And if you want to be bearish on things, I wouldn't want to see the S&P regaining 2085, as that is last week's high. Let's get a lower high going on a week-to-week basis to maybe set up a test on that 2040 area. And if we get beneath 2040, then I do think it becomes a sell rallies type of environment, and you look for a test ultimately down towards 1970 to 2000, which is the December and January lows. So just to recap, 2040 is my key level, 2085 is key short-term resistance, and 2100 is key intermediate-term resistance that you need to get back above in order to set up new all-time highs again. Also, before I get out of here, I want to bring your attention to the NASDAQ composite, as that has been a stronger index. If I can get it pulled up here and remember the symbol. That's not it. Okay, there we go. So NASDAQ composite index here has been much stronger. The S&P is only up 1% on the year. The NASDAQ is up closer to 5%. You can see we've actually had some direction. You've made higher highs, and you haven't, the S&P is pretty close to its March lows. NASDAQ would have to fall about 2.5 3% to get down to her March lows. So she's just been a stronger index, but she's right at a key psychological level, and to me that is the 5,000 mark. You closed at 5,009. I love the NASDAQ setup relative to 5,000. I think if you hold 5,000, that bodes well for the broader indices, and you're getting a bounce back up. But if you are losing 5,000, that bodes well for the bears, and you're getting a leg down towards 4,900. So watch NASDAQ 5,000. I think it's a simpler index in terms of where it's at on the chart to get a better read on relative to the S&P 500. Good luck.